All right, last week was a blur. I'm transitioning and really dialing on what I want to focus on, but this is from Thursday, February 5th. We had unemployment claims, we had JOLTS openings. Come over here. So this last Thursday, it's gold, 4 hour bias. So let's go to where Thursday was. So Thursday by so yeah, we were short going into Thursday because we closed under this low right here. Switch this to blue, so it's the market structure shift color. That's my market structure shift color. So we knew by the time this 6 a.m. 4 hour open and this 10 a.m. 4 hour open that we were definitely bearish already. So switch the vibes to bearish. Alright, so bearish. And I think I'm about to be, now that I'm not trying to trade a prop firm anymore, I think I'm actually about to become profitable because I haven't even gave myself the time to just trade a live account. And I trade a prop firm. Sometimes I just blow it at the end of the month because I'm like, man, I don't got that 50 literally, like, quite frankly. Well, I got a new job now, and but quite frankly, I've been thugging it, man. I'm not even gonna act like I haven't. I've been broke as a bitch for like so long. I've been more broke though than anybody, and probably more successful simultaneously. All right, so this is Thursday. We knew that Thursday I already retraced to OTE of Asia, or put that there on this close. Barely skimmed OTE. It honestly missed this fair value gap by like a smidge. So I don't know why this didn't. Did it pull up in there? If it pulled up and tapped this fair value gap, then it did what it needed to do. And then we have New York did the same thing. Came back up. This was at a lunch move. I think that's why I didn't take this one, was because it was at a lunch move. Or it's going to be this liquidity sweep of these highs right here, and it's going to be this little short right here. But let's see what it is when we go in there. Oh yeah, actually it was two A plus plays because look, all right, I remember this now. See, these are double tops resting right here. This is a double high right here. This is a double. These are two highs, and not only that, there's this imbalance right here. So liquidity draws towards double tops. That's where liquidity rests. So there's double tops right here, and there's a fair value gap. On top of that, there's this up closed, making this a bearish order block, making this a high probability setup for a short right there. I'm pretty sure. And then I think it came back and it provided another. Oh no, that's the lunch move that it provided. And it was during lunch. It wasn't a lunch box move where it sweeps the lunch. It didn't sweep the lunch until right about here. So this is the lunch move if there's a lunch move too. So there might have been a lunch move. So there might have been three significant moves this day. But liquidity's resting there. And then we got liquidity resting over these highs right here. These relative equal highs right here. And right here over these closes of where these relative equal highs are. So I think it swept right here and did a short. I think it swept right here and did a short. And then I think it swept right here the next day and did a short. But that's just during a random time. So let's go in and see. Let's go in and see. They pull to OT. We got relative equal highs. That's what REQ means. Relative equal. Alright. And then we got OTE, and then I gotta go downstairs for a little meeting real quick. 10:45. OTE, and then yeah, let's just say sweep of highs. Sweep of highs slash FVG, that fair value gap. Now let's go in and see what the plays really were. Should have done these last Thursday, no excuses. Should have done this already by now, no excuses. We're coming to the 1 minute. Let's see what it is. Alright. So yeah, I remember this. This was the great day. So yeah, so this first, before we got up to those higher, deep in the actual OTE of the range, it gave us a short right here because we swept those highs that were right here. This part right here, this part that's sweeping that yellow line right here and going down, that's the move right there. So we're going to go in and that would be right here. So we see it actually gave an entry and then a false entry. So the first false entry was right here. It did all this sweeping, a market structure shift, and then, but this fair value gap is barely in equilibrium. Yo, so would we even trust that? And then there's a volume gap right here, but then we would have got stopped out. Now this candle right here, this is that 10 o'clock news candle right here. So I think that's why I wasn't taking this, because we have 8:30 news and we have 10 o'clock news. This is like, yeah. So it looks more like a long entry. I'm not even gonna lie to you. But because how it, but nah, I came back down here and swept, and then nah, alright. So we can switch this to the 2 minute structure though, make it a little bit cleaner. This would have been better if I would have done this the day of, when I'm actually fresh on it. But no difference. I still need to look over this. Yeah, that fair value gap's only on the get it on the 3 minute. Good. Yep. So I honestly don't think this one was such an A+ move, because honestly, I mean, we have the 1 minute market structure shift. I would have already entered this move and then got stopped out, and then it does it again. Boom, right here. So now I'm looking for a fair value gap. You got these two relative equal highs and this fair value gap right there. Definitely some liquidity resting right here. Damn, I should have done this video a lot more smoother. Excuse me. Ooh, trying to just make it straight. All right, let's put it right. Just put it right there. That's what matters. All right, so first short, this would have been a fire setup. This is also an OTE of this 1 minute range, I'm pretty sure. Yep. And let's put the stop loss over this high just because I like the little breathing room. 109. And what would we have got in the bankroll department? At least off rip 2 to 1, just from the equilibrium range, just from getting out past yeah, just from this little range from. And then if we're targeting equilibrium of this range, look where liquidity resides in equilibrium of the range that went to the draw, that would be about the same spot. So yeah, I would have took profits. I would have just took a 2 to 1. That's it. And then 3 to 1, it did present itself. It did actually take out this whole draw. So you see that, but I think I'm gonna start taking 2 to 1s because I'm only trading 1 micro, and then when I get to trading 2 micros, I'm gonna leave a runner for the 3 to 1, and that's like kind of like guaranteed, like. TP EQ of range, then leave a runner. Alright, and that's how I would have traded that, but then there was the lunch move. So now, stay on this page. So now you see where the liquidity was resting right here, right? In OT, London. Right here. These high, that high. This fair value gap. This range from here to here. This 62 to 79% retracement level. Alright, so let's look at the second move. Second move. That was right. Oh, shoot. Accidentally moved the thing. Alright. So just to clear some of this noise. Alright, now this is probably the more respectable one. Now we see it pulled into OT post. This is the first move. It swept here, then took that draw. Now it's up this low. Now it's going to attack a high. Boom, take the liquidity out of here before it came to take the liquidity back down here. It's just constantly sweeping liquidity. 10:37. I got a meeting in 8 minutes, gang. So I'm going to just dance my ass on down there. Classic. So yeah, so usually I wait for lunch to make a high and a low, and then I wait for it to sweep the lunch high and then carry on. But clearly you could see that lunch was actually still a very clean run. It was a clean run all the way into lunch, where it swept this liquidity where these double highs were. So now we've swept these triple highs right here. We swept these double highs right here in OT, in a fair value gap. I mean, just sometimes time isn't the key factor. I mean, the action is saying we have a 1 minute market structure shift at that, whatever that word is with the P. I could use the restroom. Fair value gap, equilibrium, hit the sell. Honestly, I like gold. I think gold is the easiest thing that I found to trade. I'm not going to lie. And then TP. Technically, I'd take it right there because I take it at. I'd really want to take it right here where this liquidity resides under this low that's in equilibrium discount. But this fair value gap right here and this down close candle, I don't want liquidity to send it off. What did it do? It pulled into that area and then it retraced. But that area is already that's a good little shimanya right there. For one contract too, you're good. Yeah, you're good. You were good, like right here. I'm not gonna lie to you. So you were definitely good right here. But I mean, you hold to their bet. Now, if you're really that dude and you held till here, bro, that's how you go. That's how you grow an account fast as bro. But how would we have known that it was gonna project that far down? You know, that wasn't a straight drop either. That was a long drop. Well, we had all of this liquidity resting right here. The higher time frame flow. Maybe that had something to do with it. But let's go back to what we was on. So now we're gonna take a screenshot of this, and that was this date. Hopefully this wasn't a crazy stupid video. Everything lined up, man. I'm not gonna lie to you. Relative equal lows. OTE. Double tops. Triple tops. EQ for TP. Very cherishable. Alright, and then I got a meeting in 5 minutes. Word. Alright.